Good afternoon, everybody, and welcome back to Retirement Trades. I know it's going to sound surprising, but look at this. We are having another down day. Look at it. The market is literally sliding off the side of a mountain here. The good news is that we're going to get to some support here. One, this is a pretty good support resist. There was good resistance here. I firmly believe I will guarantee you that I will be 100% right 5% of the time that this is going to hold or minimum slow for a period and consolidate in this range. That's my guarantee. I will promise you I'm 100% right 5% of the time. So anyways, yeah, big red day. Normally we would be excited about this, except for we're devastated up here in the buying powers, and I need to figure something out here. I did have a couple of messages back and forth with some viewers, and let's just say this account has gotten a little off track. I think that I need to reset. I need to regroup. I need to rethink. I need to get back to the original plan. I think what's happened is I've tried to be more entertaining and YouTube-like, and that was not the reason for creating this channel. The reason for creating this channel was to trade a small account and see the challenges of it, try and figure out a strategy and move forward and, talk to other people and do that. I don't plan on this being a huge channel. I don't think I want that burden. I don't think I want that responsibility. But what I do want to do is work with like-minded people to figure this out a little bit better. So what do we need to do? We need to go back to basics. We talked about starting this out with like a wheel strategy. Well, we were doing okay with kind of like wheel strategy, selling puts on lower priced entities here that fit within what was our $10,000 account would allow me to basically, worst case scenario, be assigned 5 positions in $20 stocks. So I know some would be under 20, some would be over 20, but either way, that was the game plan. And in doing this, in the wheel strategy, I should have been selling my puts around the 30 delta. And basically, and then when I got covered calls, maybe even shortening that up to selling covered calls in the 20 to 25 delta, based upon the market conditions and what the expected moves are. But I didn't. I was started going closer to the money, chasing premium, and making a lot of mistakes. And to be honest with you, that hasn't bit me so bad. We're not doing bad following that modified strategy of chasing money with higher premiums. Even in the down market here, this is mostly temporary here. We start talking about the Carnival, the Mara, the Soxel. Those are not devastating. It's rough, but it's not devastating. The big one is the AMD. AMD, you've heard me say it 100 times, has no right being in this account. Why not? It was, when we started, $120 stock, and you cannot hold options on a $120 stock in a $10,000 account. You don't have enough to cover if you get assigned, and we know, based on last month, we did get assigned earlier on Mara here, that it happens, and it also happens early, which is not expected. So I don't have a solution for the AMD problem yet. I'm struggling to try and figure out if I want to wait it out. I've thought about just selling, or let's just say closing all these positions, and to be true to myself, opening them in one of my larger accounts and basically replacing the money lost with AMD, which is, it's not money lost because we haven't closed the positions yet, but it's been getting worse by the day. AMD, let's just go for 180 days. Our account's not been going along. So we are currently down $2,600 on AMD alone, okay, which is terrible. Look at this, we're down $3,100. So the AMD position makes up almost the entirety of our losses. So that is a huge problem, which is going to slow the growth of this account in this channel. Basically, the strategies of this channel, I should say, significantly. So I need to figure out what to do with that. The biggest looming problem here is this put. Okay, so this put that we sold accidentally, I was trying to execute a covered call on the fly with no planning, no thinking, and instead of buying this leap way out in September and then selling a call against it, I accidentally sold a put against it because, well, I was literally winging it while we were just kind of doing not a live recording, but while I was recording. And that was me being distracted by the filming process or whatever, or trying to be entertaining. But that was the biggest mistake we have made. Now we have, by rolling this, collected a total of, I want to say, AMD, I've got these highlighted here. You can see down here in the corner. We have collected a total of $760 in premium for that put, and we still have a $1,365 valued put out there that is open. So, in all honesty, if AMD can get over the 120 mark, we would be able to keep that premium there and have profited 760 on the put. Now, what we have seen, and I really kicking myself a little bit, as I've gotten this down to where we're within, $200, $300, $400 of being even on that. And each time I was waiting for that last, $200, $300, $400 to bounce back up and to close that position. But the fact was, once I got close enough, I should have done it anyways, because now we have a net liquidity of 2660, we'll call that, and 760 off of that. We are totally down. If we sell this now, we lose about $1,800. Excuse me, $1,500, right? $1,500, which is not exciting. So what are our options on this AMD put? We can treat it differently because it is, we have, one call is actually being sold against it. So let's see here. What can we do? Let's look. Let's talk about rolling this down so something manageable. Where can we go with this? Okay, we're way up here, 120. Roll it down to 115, 110. What would it take to roll it down to $100, which is right around the line here, basically current trading value? Well, if we paid $1,387 right now, that would wipe out that $1,500 loss. Is it wiping it out? No, but it would be making $123 equity back into the trade, really. So it's not optimal for sure. Okay, but that would just be pushing that out to the May number here. Okay, so how would we get this to be more of a credit or less of a debit, I should say, is to push it out in time. So how far do we have to go to get this down to even or credit? Let's just keep clicking this little button as long as it'll let us click. Okay, so the best case scenario, and this is going out to January of 27, okay, with an anticipated move of $46, which is pretty good if it goes in your favor. If it doesn't, well, then that's a whole different story. But anyway, so if we paid $128 right to now, okay, which is, yes, an additional cost, we pay $128, but we would be gaining $2,000. Does that make sense to you? Because we now have a $100 strike price. We have all the time in the world, or so it should appear, to get out there. Let's say we don't need to go that far. Let's go to 105, okay, which is only $5 out of the money right now, or I should say in the money. Let's pump that. Okay, look at that. If we go down to 105 and we push it out to January 27, we can collect another $1.60, which puts us as total premium collected on this trade would be $920 collected. And it would be a whole lot easier for AMD to get to 105 before January of 27 than it is going to be for it to get to 120. That does not sound horrible. I know it ties up that buying power for a very, very, very long time, but the extrinsic value that gets added to this trade in the $1,500 savings that were already currently out or gaining back instantly. You know what? Let's do this. Let's just put this trade on. Enough thinking about it. Let's just send it off and 162, and it is filled. Boom. That was easy. Okay, so 162 and $105 strike and January 15th, 2027. Okay, let's stick this in the charts here. We are going to take this put here and we are rolling it today. And let's see, I'm going to have to check the email to see what the price was that we paid for that. Give me 1 second here. We bought that back at $22.45. Boy, that hurts. Okay, but it is what it is, right? So now we're going to come down, slide over here a little farther. Very same day today, we are selling that put for way out there. January, was it 16th? Man, okay, January 15th. Okay, so January 15th, Thursday, okay, and that threw me off a little bit. But now we have a 105 strike price. We have, not for one contract. And let's see, we received 2407, and that is now the open position. Okay, so let's just quickly do the math here again on the puts. We've collected these amounts. We have essentially lost those amounts, and we've collected this amount. And that's not right, is it? Or is it? What did you do, Mark? Oh, man. Brain's not braining. Okay. In the wrong column. We got to go here, there, and there. So now we have secured $920 in premium, and we need this to close out at a break even, basically, to get that $922 in premium. So if we can get over 105, we should be okay, and I can see that happening with AMD. So let's go back here, positions, and now that AMD put as 676 days, $1,788 in extrinsic value, and let's see how that plays out. But I don't need to think about that for quite a long time now. If we get anywhere near where this is negative $922, we will bail. We will just, be able to get out of that fairly quickly. Who knows? Even profit, we'll see what happens. But now our trades are looking a little bit better because our original leap call is for 115. Would I like that to be lower? Sure, but I don't feel too bad about it being way out in September, and we can continue to sell more calls against that and collecting a little more premium on that. So, all right, so AMD is we don't need to consider that for a while. So, okay, what do we got? What are our immediate thoughts here for? Okay, so Mara, looks like we're open up $23 on this trade so far. That is this week, 17th, no, March 14th. So this is this Friday coming, 4 days away. And let's see what that would look like roughly. Um, hmm. So we would have to buy that back for 29.70. I just want to pop this in the chart here real quick, just to get an idea what our overall position will be like. Let's see, negative 29.7. Okay, and would have to make that a closed position. That's not sounding right, is it? You know what, Mark? Let's get a 0 off of that. Let's move that decimal to 2.97. That'll look a little bit better. Okay, so if we closed that for $297, $297 a share, we would collect the $18 and we would in fact still be up $187 on Mara if we wanted to close it. Now, what about roll it? Let's look at that. What are our options there? Because I mean, it's only a matter of time for Bitcoin to pop back up and make at least some sort of a short-term run. So let's look at this roll expirations. Anything exciting? We can go 2 weeks, get a quarter, 26 cents. Let's see what we got there. What's the mid price? Oh, look at this. We got a big spread here. So 37. Let's see if we get 40 cents quick. I mean, it's bouncing around. It's entirely possible that while we're doing the rest of this video, that can fill. Okay, so Carnival, we still have 18 days left on that. Carnival's currently at 1911. I would like to potentially roll that down. Let's take a look at the Carnival chart here. Yeah, it's following that same exact slide that the market is. I don't think there's a big problem with Carnival. I just think it's getting wrapped up. I mean, you see me guys, I'm not really panicking about these numbers up here, and that's because it's just the market. It is happening. We're experiencing this pain, and everybody's experiencing this pain. But I will tell you this, I'm also looking at this as a massive opportunity. I have transferred $50,000 from savings into one of my larger investment accounts, and I'm on a little bit of a buying spree over there. Let's see, I think I've spent a little over 20 of that already, and I got some good buys over there, or what I perceive to be good buys at this point. Market goes down another 10%. I'll spend the rest of that money and just wait for it to come back up. So that's just one of the advantages I have of being, relatively older than most of you probably. So I don't panic. These things happen. They happen all the time. Statistically, the market will pull back 5% at least once a year. Once or twice a year is common to have a 5% pullback. Every year to two on average, you'll get a 10% pullback in the market. And then I want to say roughly every 5-ish years, 5 or 6 years, is when you get the bigger corrections of 20% or so, 20% or more. So this is not out of the ordinary. It is not terrifying like a lot of the headlines and YouTube videos and titles want you to believe. This is what is a normal correction. I'm looking at this support resistance line right here. And yeah, I think we're going to be just fine. If it falls below that, then I won't panic, but I will try and find some other strategies, or I might become a little more bearish on my trades. But right now, I'm going to try and stick it out the best I can and see what happens. So mid price is 40, it's saying, so 30. So let's just try and let's get the 30, see if it'll do the 35. And I don't want to keep you guys too long. I don't want to make these videos too long, but yes, the main focus on this account is regroup, reset. So we're going to reset this account. We're not financially, not going to add any money. Boo! Wow, words were hard right there. Not going to add any more money or try and get this. I thought about getting AMD out and swapping that out to another account and just transferring that cash here and these stocks there type of thing. But I think this is going to be a good learning experience too, because people that are playing with small accounts are going to be a little less experienced. And I'm not saying this is the correct way to handle this, because I am not a professional. This is not trading advice. This is me letting you observe what I'm doing. And I definitely can screw things up. It's just, it is what it is what they say. So. All right, I don't know if they're going to let this slide through. I'm not terribly excited about settling for much less, but let's go penny under. And I just think there's too wide of a spread to get filled on that. So let's do this. Let's cancel this order. Let's see what the other options are on this here. I mean, we got a couple of days, although I do not want to get assigned on Mara again. I really don't. So 35. Let's see if it's easier to get assigned on the weekly here. 40, 50, 60 cents. 3 weeks out, 50 cents. Hey, there we go. So, okay. So now we're rolling our Mara out to April 4th. And let's get that added in the chart. Mara, okay, so this position, okay, so no, this is the one we're just tinkering with, where we've rolled it today, and we're talking about, let me see what the buy price was there real quick. Okay, so we bought that back at negative 305, and even by doing that, we're still clear 179 to help offset the roughly $600 we're behind on the assigned shares. And okay, so then we sold another put, and this is for April 4th. Same $17 strike price, one contract. And what did we receive there? We received 3.55. Okay, and this is now our open position. So, all right, so we actually made 10 whole dollars there on that previous roll, and we have the potential to make more. So, and we pushed our problems, we kicked to the can down the road, which happens a lot in business. It happens a lot in government. We're seeing it with the debt ceiling. They've been doing that for decades and decades. There's a point where you got to kind of give up, take the loss, and whatnot. But we're not there yet. We're literally still kind of struggling along here. But it won't take much for Mara to go back up to 17 or even 16. You know, we can even just get kind of close where we can collect this premium on top of what we've already collected. And then in addition to that, you know, that'll bring our price back up closer to our strike here. It's not too far away from, this one is not a lost cause by any means. I don't even think AMD is a lost cause, because you know it's a good company. It's a great company, and you know the market is getting crushed right now. It may be a couple of months where we we go down and we're consolidating. And, I mean, and I obviously can't predict the future, but I wouldn't be surprised if we don't come down here, consolidate back in this range of, say, 540, 560 range, and yeah, and stick there for a little while. But I do believe that the upward bull trend is going to continue. I know it's going to continue in the long run, whether it picks up and starts again before September, or we're kind of like, we have a time frame we're locked in here to September. But the market doesn't care about that. Market doesn't care about that at all. We care about it, but I can see this getting better. If we don't get to a profitable state here, we should comfortably get back to a less devastating state. So yeah, that's about all I have for today. Managing the big AMD, talking about a little bit of the reset here for any new trades that we are going to take. We're going to go back to the original strategy here. Just we're not going to be able to do it with 4, 5, or 6 stocks like we were doing it because AMD is occupying half of our buying power. But we can, with the 2 to 3 lower price stocks, get back into a wheel strategy. I mean, 2, 3, 4 stocks. Maybe if we get down into the the $5 to $10 stocks or $8 to $10 stocks, we can do that. So, and then we're just going to kind of ride out the AMD and get back to being a little more conservative, not chasing premium, and we're going to get back to this. And I'm not going to be as entertaining. It's probably need to rename the channel back to Boring Retirement Trades because it's going to get a little bit less exciting because we're going to be going for lower deltas and we're going to be collecting lower premium, but our goal is to be consistent over time because that's the most important thing. So thanks for watching. Like, share, subscribe, join the Discord in the link below, and I will catch you all later in the week.